Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless in financial markets to assist you to become more of a financial and emotional blessing to yourself and those you love. When looking at charts, it's very important to understand directional correlation. Here you can see the S&P 500, that's the candlestick chart. You can see that gold line, that's Bitcoin. As the S&P 500 came down, Bitcoin was coming down. As Bitcoin was going up, the S&P 500 was going up. They're not always exact mirrors of each other because right in here some shenanigans was happening inside the crypto market which caused it to decorrelate from the stock market. A lot of people think that the stock market and the crypto market are completely removed from each other. This couldn't be more false, unfortunately. Zooming in a little closer, and don't forget this is on the 2-hour basis, so you're getting really close to what's cooking inside the markets. We can see that Bitcoin and the S&P 500 have roughly correlated from a directional stance together. As they come up together, and as they come down together. Therefore, we need to understand the structural levels. In this video, we're going to look into that, but we're also going to answer the question, could more spot ETFs be coming for other cryptos? If you like the content, please subscribe to the channel and smash that like button. All indicators that I use in the daily videos come from the service at ctksmethod.org. Let's run the numbers. Before we get into the main video, I just want to reach out and say how grateful and appreciative I am that you're joining us today. We have an incredible global family. Into the charts, which is Edwin. Said 4 years ago, before Ken, I was chasing trades, doing fear of missing out, you only live once, and casino. No rules, following the news as a signal and getting a lot of sleepless nights. 4 years later, it's a different story. My synchronicity towards the market continues to grow day by day. Edwin says, I look at myself again today. I just want to thank myself first for actively learning and showing up here every day throughout these 4 years. Edwin, you're just a legend. There are so many fantastic comments. I urge you to read them. They're just awesome. And I'd like to thank everybody who comments and tunes in. It's just beautiful. When looking at Bitcoin, I want to give you a bit of a thought experiment. Have a look at this price action. Wow, Bitcoin just came down so much. This is not current price action. This is just going back a day or two. But can you imagine when this was happening, a lot of people would be selling. Let's just fast forward and look at what is occurring in price. Wow. Look at that. That's really interesting. Now people would look back and say, oh, I want to buy the dip. I want to buy the dip. But people just wouldn't be there. People get freaked out on these big red candles. And what is happening right now to Bitcoin? You can see there's a lot of volatility inside the market. And of course, this is impacting all the alts. The big players, the big financiers understand that the crypto market is the place to be. But it doesn't want the street to know that, not just yet, not until they've filled their bags. What we can see right now, Bitcoin has been hit really hard, especially relative to the other alts. This is a classic move from the institutional players. They have a strategy, break it before they make it. What does that actually mean? They break it. A lot of people were expecting Bitcoin to go up by gangbusters, and it did have a bit of a nice surge before it came down. But the idea is they don't want to pay top dollar for Bitcoin. They want to pay bottom dollar. And then they'll take that low point of price and they'll say, look how much it's increased in the past 12 months. I've been explaining this in the past couple of videos. That's why we need 3 simultaneous strategies. A strategy if Bitcoin just broke out and went to the moon. A strategy if Bitcoin just consolidated or a strategy if Bitcoin plummeted. Of course, how Bitcoin moves will dictate how the rest of the crypto market moves. You won't see things like this, Bitcoin coming down by a lot and the rest of the market green. If Bitcoin goes red, you can be assured the majority of cryptos are coming down. But Ken, some of those are green. Look at these. These are green. Yes, from time to time, you do get inverters. But what you will see typically, and we can look at Litecoin as an illustration, Bitcoin has been coming down. Let's have a look at Litecoin. It's important to know the rules of the crypto market. The primary rule that you need to know, if Bitcoin is coming down, no alt can escape Bitcoin's gravity. If Bitcoin is coming up, no alt can escape Bitcoin's gravity. Not surprisingly, the candlestick pattern here is Bitcoin, but this line is Litecoin. As Bitcoin has been coming down, what are we seeing with Litecoin's price? It's being dragged down with it. So even though it looks positive underneath the hood, that's getting pulled down by Bitcoin's price momentum. Let's have a look at what Ethereum is doing. And I've just changed it to yellow to differentiate it from Litecoin. You can see that Ethereum very closely just conveys whatever's happening with Bitcoin. Of course, it was a little bit different around here. We had some inversion, which was really particularly interesting. But what can we see now? It's coming back into alignment. That's why we talk about gravity. If you throw a ball up in the air, it's not going to stop straight away when it leaves your hand when you throw it up. It's going to go up for a while and then it's going to arc over and come down. The easiest way to explain it, inside the crypto market, Bitcoin acts as a gravitational force like gravity on Earth. If you're throwing Ethereum up and Bitcoin is coming down, what will happen? Ethereum will come down with Bitcoin. But as price is always moving in a wave, it's not just like gravity, it's more like a wave function. For example, what you can see just right now is that Bitcoin is starting to consolidate right down here. What's happening to the rate of descent on Ethereum? It's starting to slow. This is exactly what we would anticipate. Now, the critical thing is a spot Ethereum ETF coming. Let's have a chat with Gary Gensler. Let's get his opinion on it.
Does the court decision around Bitcoin to you act as a precedent on other currencies?
I look at what we did this week as it's cabined to one non-security commodity called Bitcoin, like we've had gold, spot, exchange-traded products and silver exchange-traded products in the past and approved in the past. This is cabined just to that one non-security commodity token.
Gary Gensler is saying no. But he also said the very important words in there. Bitcoin is a non-security commodity. Whoa, yeehaw. We've been waiting for that comment forever. This means something very specific. When there's a hard fork of Bitcoin, it's just a code split. And that happened in 2017 for Bitcoin Cash. Bitcoin Cash has to be a commodity as well. That makes it safe and therefore avoids SEC scrutinization. Another thing to remember, Litecoin, created in October 2011, was adapted from Bitcoin's open source code. Therefore, we would anticipate that Litecoin will also escape SEC scrutinization. Why is this important? Let's hear from Gary again.
Investors, I think, should be aware that the underlying asset is a highly speculative, volatile asset, and amongst its use cases is really for illicit activity, money laundering and sanctions and ransomware and the like.
If you go across to CoinGecko under categories and top alleged SEC securities, you'll see a large number of cryptos, which are alleged securities from the Securities Exchange Commission. Please keep your eyes on these pages. They're important to understand. What happens if the SEC comes after Coinbase or Binance? It will happen. Therefore, we have to be aware that this is on the cards, this is on the drawing board. What we can see is that BNB is coming down, all of these are coming down in alignment with Bitcoin's gravity. Bitcoin is retracing. Some of these cryptos are retracing more than others, but the concept is no alt can escape Bitcoin's gravity. Just because something is flagged as a security doesn't mean it can't trade. The SEC has jurisdiction over the US market. The problem is the US market is pretty big. It's the major market. One thing to note, Ethereum is not an alleged security per the SEC. A lot of people thought that Ethereum would become the next SEC spot ETF. That's why it rallied. But what Chairman Gary Gensler has said is no. Computer says no. But it's literally not up to Gary Gensler. I'll explain.
From what you're saying and reading through the decision as well, that what changed is not necessarily something inherent to crypto or Bitcoin per se, but what changed was what the courts did. Is that the way to think about this?
Well, again, we do everything here at the Securities and Exchange Commission within the law and within how the courts interpret those laws. And that's what the American people expect, and that's what we do here. Bitcoin itself, we did not approve, we do not endorse. This is a product called an exchange-traded product, a way that investors can invest in that underlying non-security commodity called Bitcoin. But yes, I have a deep respect for the law and how courts interpret the law. We had the D.C. Circuit, a three-judge panel rule on this. We looked at it, and I thought this was the most sustainable path forward.
We can see that the Securities Exchange Commission and Gary Gensler have a unified stance. It's all about what the courts do. This has probably come as quite a shock to many, many people, but it doesn't change the underpinning basis of Bitcoin. It's a non-security commodity. Straight from the words of Gary Gensler, the chair of the SEC. This is the key that we've been waiting for. Institutional players always do this kind of thing. They drive price down, so hopefully you've been buying at levels down. If you haven't been, I would suggest don't worry too much because the underpinning health of the sector, of crypto, and the stock market is still pretty good. The question is now, how far could it fall? Where are the safety nets? When you see a big spike down like this, you're going to get a lot of people selling. So let's pop on the indicator and see where the structural support levels are and structural resistance levels are. What we can see is from 48.05 up to this area, about that 41,783. That is a confluence of structural support. We had a couple of fresh air gaps just in here. That means the price can move down very, very quickly. But as it moves into structural support areas, it will rebound. This is why it's incredibly important to know where your safety nets are. If you don't know where the safety nets are, you will get freaked out. You'll sell when you should buy, and you'll buy when you should sell. The crypto market is such a fast-changing market. What I've just recently said, I was out of Bitcoin Cash, and because of what Gary Gensler says, Bitcoin Cash is definitely back on the radar. You can see I'm starting to weigh in. And what am I doing? Am I buying on the way up? No, I'm buying on the way down. I just wait patiently at structural levels for things to fill. I recently also shared that I was leaning into Bitcoin, and especially as it comes down. Note that spike that we anticipated just created some sell orders, but I put my orders up pretty high because there's a thing that you can do. You can seek annualized return on investment, high annualized ROIs, or you can be in it for the longer term. I really like where Bitcoin is going, and throughout all of this period, I'm just buying. I'm accumulating. And this is something that you want to keep in mind. This is how the institutions do it. If you trade and invest like an institution, you're going to do really, really well, because this is the opposite of what we do typically. Emotion will force you out of the market when the price goes red. That's exactly the time that you should be in. And please note, I'm focused primarily on Bitcoin at the current time, but that doesn't mean I don't trade in the other ones. They're pretty cool. I think something to note, and this could be really good for you, I typically buy on red. I'm not buying as it's going up. I'm waiting for it to come down, and I'm just accumulating at the current time. These kind of spikes down are very, very profitable. You're often safest in capitulations. And we can see that Bitcoin has had some walloping capitulations. It's come down really, really hard and really fast. It's literally dropped off a cliff. And that creates some enormous selling opportunities because you can buy it and you can sell it. And things turn around when there's a lot of volatility inside the market. There are 4 stages that all investors and traders progress through to become consistently profitable and have a really good life. Inside Zone 1 and Zone 2, people see the price coming down, they sell. People see the price going up, they buy. They're consistently encountering the death of 1,000 cuts because as it goes up, they buy. But when it comes down below their buy price, they sell, therefore locking in losses continuously, hence the death of 1,000 cuts. To get out of this mode of thinking, learning is the focus, and also focusing on probability and not certainty, having your 3-dimensional thinking at all times. There, of course, was the probability that Bitcoin would just go parabolic. Yes, that was a probability. There was a probability that Bitcoin could flatline. That was also a probability. And a downward price momentum, that was a probability as well. We've seen all 3 play out, and now the downward one is in full force. This is nothing to be concerned about. These are just the games that institutions play. When you're buying on red, that's when you've entered Zone 3. Just like Edwin said at the start of the video, Edwin 4 years ago would be running away from the market, and many other people have said this too. Now we're fearless. We just look at the market and say, getting on the right side of the percentage. Leaving Zone 1 and Zone 2 behind is really important to do. Not only do people run away from the market, but they get really angry. Your anger is non-productive because blame always disempowers you and creates compounding losses. Instead, you just need insight. Just be kind to yourself. Forgive yourself for not buying at the bottom and selling at the top, which is impossible to do. And we know price is always moving between structural levels. So don't even worry about doing so. Just buy and sell at structure. What's reasonable for you to do? This will empower you. And what you will find, life is always giving us lessons, not just inside financial markets, but all the time. Each time you come up to a setback, it's actually a set up if you can be kind to yourself and kind to others in the process. You just want to gain insight, which is awareness and understanding. There is a rule that you've paid for. If you're looking at a paper loss and you're just saying, oh no, my account's gone down by X dollars, Rule 212 is really important. Those tuition fees, they're vitally important to pay, and everybody pays them. You can see right now on my Bitcoin trades, technically I'm making a loss, but do I care? Absolutely not. I'm getting in on the right side of the percentage, and I know the bull market is coming. There are so many unknowns. Of course, this is always the case, but that is totally fine. We don't care about certainty, we care about probability. That's why being kind to yourself, focusing on your learning, is vitally important. Maintaining your inner peace and outer peace is incredibly, you need to focus on it. It takes many, many years to unwire those particular phrases that you have in your mind. Never lose money. Whoever told you that was nuts. All financial markets move in a wave. To never lose money is just it's an insane proposition. One of the best things that you can do is never sell at a loss. And when I say never, there's a little asterisk next to that. If you're never selling at a loss, it depends on what you're selling as well. Have a degree of flexibility, but in 95% of cases, don't sell at a loss, and you'll see that position turn around. But of course, you need to know what you're doing. Always have your down strategy right in mind, your neutral strategy in mind, and your up strategy in mind. Definitely, we control the trade or investment, but the market controls the return. If we were thinking that Bitcoin would go parabolic, I still believe it will, absolutely, but maybe not just yet. That's giving us a unique opportunity to get in at a lower price. Could it go lower? We hope so. Ken, don't hope for that. If you're going long at spot and you're hoping for it, you're doing really well. That's what you want to focus on. Looking through the structural levels of the Tier 1, Tier 2 and Tier 3 charts, everything looks relatively healthy inside the market. And that's important because they're all intercorrelated and interdependent. You may have seen the yields go down, gold starting to stage a bit of a rebound, negative momentum on the DXY. Also, the DXY is under massive structural resistance. Make sure you're doing your cheat sheet. It can give you an enormous edge inside the market. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Have a great weekend, and bye for now.